All right, so this is my blog here, and it's at teamfinanceflow.ca. And here's something I posted recently just about obtaining a rental property. So you can obtain a rental property with as little as 5% down.
So it's 7 o'clock. Thank you everyone for joining for another real estate investment webinar. Today we are going to cover a little bit of what's happening in Toronto. And then we have a special guest, Kim, that is with us today. Now, as many of you know, my name is Ashton Ekbatani. I'm doing real estate investment for last 16 years. I am real estate investor, coach, and author of many books, and also the host of Wednesday Real Estate Investment Webinar. As I'm always introducing this webinar to the audience, the goal of this webinar here is to help you move from wherever you are to a higher level. I call it savvy investor. And as a savvy investors, you have all the best position to decide and pick the right properties. Now, I know you hear all the news from left and right, what's happening in the market. And if you're not founded very well in real estate investment understanding and knowledge, you're going to be blown to left and right. What I'm promoting and want you to be is to have a roadmap of what you want to do and where to go from here. So here's a media news that are bombarding us every single day with all kind of newses. Now, as a savvy investor, you have to look at what media has for us and reality. And reality, you can check it with all kind of tools that are around us. I'm going to introduce a few of them to you, and that's what I do every single day. It's not when you hear the price of homes in Canada is going down, that you are going to panic. It doesn't make sense. The news we heard, the price of homes in Canada going down, doesn't make sense, because real estate investment and real estate altogether is local and it's not global. Many years ago, I heard in the news that the price of homes in Canada is going down. When we were looking at certain point of Toronto, let's say Bayview and 401 neighborhood, the price was going up, I think, 20% higher. So you have to really look into the media and news and pull out the reality from it, if there's a reality. Now, here's the market update for you guys of what's happening in Toronto right now. These are the information I pulled out today. Actually said November 2nd, CIBC Deputy Chief Economist warned that housing market slowdown is coming. First of all, it is normal to be a slowdown. We're talking about November, December. The market would never, ever go to zero in November, December. We have good sales, but the trend is slowing down. Now, remember, the Bank of Canada has reduced the interest rate, is encouraging people to come back to the market and start purchasing. Now, below this article that I pulled out from Toronto Stories, it said 45% of people believe that the real estate market would increase, and 13% said no, it would decrease. So with a large number of 45%, I'm not sure why the CIBC is saying that the market would slow down. It would slow down compared to the hype, if you want to compare it. There's another news that shifting home buying behaviors, immigration continue to impact Canadian housing market, which I 100% agree. Now, here's another information. This is from Toronto Real Estate Board. These are the sales compared to previous years. Now we are looking at, I have the information for the month of September, which is orange here. It shows the market is, the number of transactions is very solid, is very active. The buyers are not sleeping or abandon the market. They're actively looking for good property, and the real estate transaction is very good now. Now, these are the resale price value. Everybody thought the market, actually today I was talking to someone said, I'm waiting until the market crash. Well, good luck, it won't happen. Now, based on the information we have here right in front of our eyes, and rely on this information. Do not rely on your friends that you're around barbecue, standing and together barbecuing your food or your steak, and you're talking about, well, the market is crashing because you think it's crash. Well, rely on numbers, not on the casual conversation or speculator. Now, September, the price went up. Based on this one, I also pull out some more information. Residential status said the number of transaction compared to last year, we have more transaction, which we saw it. She's going to go 25.1% higher. Now, here's, if that's your concern, on the second graph here is the average selling price. We are 13.7% more growth happened this year compared to last year. Now, days on the market, and this is interesting to know what's going on. Now, the days on the market is less than last year, means as soon as a house hits the market compared to last year, it sells very fast. So here it said within 24 days, a house sells compared to previous year. So the market is hot. Now, the increasing price of properties is pushing so many of, I see very much the first-time buyers, but regardless, many of people is coming out of Toronto. They go to Oshawa, Ajax, and Barrie. I purchased a house for my investors last week in Barrie. The price was very reasonable. Big detached homes. I think we bought it for $650. And some people coming. Milton is catching up the price with Mississauga. Is very much coming almost the same line as Mississauga. I see Georgetown is growing thanks to GO train and transportation. A lot of people is coming and growing around that area. Burlington on the actually on the north side of Hamilton, we have Waterdown. That whole area is growing big time. It's booming. Bradford, it's amazing. A lot of builders are going there. The lands are cheaper. And I think last week it was Cachet Home that put 80 homes on the market, and we got 700 application, and it was sold out, of course, within a few days. In Grimsby, also because of the GO train going there. So many people is coming out of the expensive neighborhoods, and they're all going outside. So the opportunities is everywhere. You have to really dig into that and find the right property for yourself. Now, I'm not saying don't stay with Mississauga, for instance. Each neighborhood has its own strategy. For instance, in Mississauga, single homes is not justifying and making you break even on your mortgage. That's what I noticed. But if you have a dual residence, if you have duplex or triplex, absolutely, it makes very much sense, and you can make positive cash flow. Now, learning materials before I move on to our today's guest. This is my YouTube channel. All of you can go there. Please subscribe there. Every few days, I throw in an informational material for you, a video, something that will teach you or help you to understand more what's going on with real estate investment. Now, this is my Facebook for investors. Many of you are there. So sometimes here and there, if there is good news, if there is any new strategy, if there is a home, private home for sale, I'm going to post it into that site. Now, these are some of the books I published. You can access or you can purchase them through Amazon.com. And today's webinar is everything you need to know about buying a rental property. It's part 1. And thank you for Kim to come, and she's our special guest today. Kim has a strong background in investing in real estate. She also, and let her talk about her own story and where she started from. I know Kim for many years, and she helped me with mortgage, and she's very, very knowledgeable person. And Kim, are you there?
Yes.
Okay, it's all yours.
All right. So I'm sure, Ashton, when you start talking to people about real estate, how long does it take until you're starting to talk about financing?
Almost immediately.
Exactly. Yeah. So I thought I would share with people today where they can go when they want to kind of figure out how to even think about it. So now I can share my screen, right?
Okay, let me help you to.
Okay, because I'm disabled.
Okay.
I have a website and I have information on my blog. So what I try to do is put good information there so that when you have time, when you're in the mode of figuring things out, you can go there and start to think about.
Okay, you want to take my screen now? You can share your screen.
Share screen. Yep, looks like I can now. All right, so this is my blog here, and it's at teamfinanceflow.ca. And here's something I posted recently just about obtaining a rental property. So you can obtain a rental property with as little as 5% down.
Even for investment?
Yeah, well, yes. So there's a caveat. So at the bottom, I put a note on that. So the way you would do that is if you're turning your current home into a rental and buy a new owner occupied, that's one way that you can do it.
Oh, smart.
It is the easiest way as far as qualifying. So recently I had someone who had quite a bit of equity in their home and they wanted to buy a similar home in their neighborhood and turn their current home into a rental and buy a new one. So we were able to qualify them for that. And you will qualify for more in those scenarios. It's complicated. I've got a ton of things here that you have to consider. I'm not going to go through each of them, but when it comes to rentals, things are quite a bit more complicated depending on your situation. But there's a lot of different ways. You can also buy with just 5% down if you're buying a second home. So not necessarily a rental, but if you're buying a vacation property, or maybe you want a place for a relative to live in, something like that. I also have other material on construction financing, putting a mortgage in a company name, alternative lending. But the main thing is just spending the time to think about how much sort of, these questions, do you have good credit? Do you have a significant down payment? Where's the down payment coming from? And just getting a solid pre-approval in place, because it's a pretty competitive market out there, is what I understand. And so
one quick question, Kim, before I forget.
Yeah.
I see some people, they are renting right now, like they are not homeowners, and they are thinking of purchasing a real estate investment property to rent it. Is that a good strategy? Is that practical with 5%?
Oh, for sure. Yeah, there's lots of ways you can do that, for sure. It's just, those are actually easier because you only have one property you're buying, right?
Good.
Yeah.
Okay, go on.
That's really it. I think it can be a little bit complicated. So you want to have someone who you have a good relationship with that's going to do a good job on a pre-approval. And
so what do you need as a pre-approval? Is it a difference between anyone buying a property or an investor?
So like, if you're just, you mean like, does anyone buying a property, it's easy, right? If you're just buying your first home or whatever, those are fairly easy. But more properties you have, it gets more complicated.
But should you really open up and tell, I'm buying this one as for an investment?
Should you open up about it?
Yeah. Should you tell the bank that you're buying this one for an investment?
Yeah, I mean, you want to shoot straight, right? You want a frank and fair conversation about what's going on, so that you don't get caught off guard.
So what the banks are looking for when it comes to buying a real estate investment? Let's say I have 5%. Let's say I find a property for $500,000 and they come with 5% of it, right?
Yeah. So it's the same as they just want to know that you have where the down payment comes from. So it can't be gifted when it's an investment property, right? But if you're doing it Yeah, or as a second home, it can't be gifted. It has to be money that you've saved yourself. So that's really important. Um, the, so, sorry, so if you're buying a second home, or you're staying at your parents' house and you're buying your first investment property, but you're buying it.
That's right. As a first property, like I'm
Yeah.
staying with my parents.
Okay, so in that case, you would want to move, like you would want to buy that as an owner occupied, right? Because you can't do rentals. Like you can't be, oh, I'm going to buy this rental, and put 5% down. It does, no. 5% down is for your own owner occupied or a second home.
Okay, within second home for your personal use.
Yeah, or a family member.
Okay. Okay.
Yeah.
Such as a cottage.
Yeah, vacation property.
Now, can I have a house, my primary location in Ajax, and I said, listen, the distance is too far. I'm going to buy a house in Hamilton. Makes sense?
Yeah, it's case by case. So, you know, they'll certainly look at commutes and things like that. It has to make sense. The story has to make sense.
Okay, so in that case, I can come up with 5%. And any specific questions asked that I should know?
So it's going to be like any mortgage application in that it's down payment, income, credit, property, right?
Okay.
Same for any. So they want to see the down payment. They want to see how strong your income is. Can it cover? Can it meet the ratios? You know.
Now, if I come across a property that is already rented, I'm like thinking about a duplex. Upstairs is empty or the basement is empty. Someone's living upstairs paying rent. I find this property, a private property that is not on the market, but somehow I find it. And I notice that if someone's renting upstairs, basement, I can move in there and live in the basement. Is it practical? Would that work?
Yeah. How often do you see those?
I see that here and there. I find few in Mississauga. I found few in Brampton.
Yeah.
Milton doesn't have much of those. Hamilton, I see mixed use. Burlington, yes, I find in Burlington as well.
Yeah. Yeah. So if it is more, if it's 2 to 4 units, then you can do with a minimum down payment. I don't think you're going to find anything for 500,000. So it's going to be, you know, more than 25,000.
Okay, and would the rent be a consideration for the bank?
Then they can use the rent to help qualify.
Let's say I'm getting a rent for $2,000 per month. How would that help?
So they can use up to 100% of the rental income to help qualify. So some will use, say it gets complicated. So if you look on this list I have here, sometimes they will add the rent to the income, and sometimes they'll just take away the expenses, and you'll have either a liability or a surplus. So it's number 13. So it's rental income or offset.
Okay, so let's say my income is $880,000 a year, right? And I'm collecting, let's say $20,000 rent per year. So the bank is considering then instead of $80,000 income, it would say you have $100,000 income.
Yeah, it's more. Yeah. Sometimes they'll only use 50%, so then it would be 90,000 income.
Is there any specific bank that are more flexible towards this kind of a strategy?
So there's different kinds of lenders, but also it has a lot to do with whether you're buying insured or not. So if you're putting down less than 20%, then that has a big impact on how they calculate it. You know, or instead of adding it to your income, sometimes what they can do in some situations is they'll look at the income and they'll take away the cost of carrying the place and then add it as a liability or as income on the application.
Now, let's say I go with 5% down, then my document would go to insurance company, let's say CMHC. Is there a requirement in terms of using the basement's income different than a bank?
So CMHC deals with lots of different banks, right?
Okay.
But yeah, bank to bank will be different.
No, what I'm trying to say, let's say CIBC, the way they look at my paper verbally, they said, okay, so you're generating $20,000 from the basement, you are making $80,000, $100,000, we qualified you for, let's say, $500,000.
Mhm.
Now, they are sending this document to CHMC. Are they looking at this situation the same way the CIBC is looking, or they said, no, 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 you're not going to accept $20,000 rent from the basement. We only consider 50% of it.
Right. So that's part of what you have to look into when you're looking for a mortgage is how the insurer is going to look at it. So there's CMHC, Canada Guarantee, and Genworth. And then you have to look at how the lender is going to look at it. And usually what I find is sometimes the insurers are more flexible than the lenders.
Interesting.
Mm-hmm.
Now we have 3 insurance companies, CHMC, Genworth, and Canada Guarantee.
Yeah.
Really? The new one is Canada Guarantee. Never heard that before.
Oh, really? No, it's been around a long time.
Really? Okay. Okay.
Yeah.
Now, okay, perfect. Now, where do you see, like you do investment yourself. Have you ever done 5% down?
Personally, no.
No. So you're always going 20% down.
More than that for myself.
Okay. Is it worth it to come up with 10% down and then borrow 10% or get a gift from a friend for 10% to make it 20%?
So when you're doing a rental purchase, I would say you've got to come up with the down payment yourself. If you're buying an owner occupied, that's different. But when you're doing a rental property, you've got to come up with that yourself, unless you're buying, as you say, a multi-unit, which is a totally different situation because you can buy those insured because maybe you're going to inhabit one of those units, right? Like if you have several units in the building, you're going to inhabit one. So now it's an owner occupied with a rental. So that's different.
Okay. Now, which one?
Every situation is different.
I know. Each case is different than the other case.
Yeah.
Now, some of my clients, they are renting for their own, and then they see the opportunity to purchase one home and rent it. Some others, they start from buying a house for themselves before they even considering buying the second one. So to your opinion and based on financing and mortgage, which one is a better strategy? Having one for yourself and sitting there or buying a rental property?
Honestly, it's always easier to buy an owner occupied. Like it's always easier to finance an owner occupied.
Okay, so that's what you're.
But that doesn't mean it's a better strategy because I don't know the particulars of the person's situation.
Okay. I see some of the good strategies. Someone buy the property and rent the basement. So at the same time, you are living on your own and you don't waste your money for rent. Also, you are collecting some rent from the basement, legal basement, and then you are helping your mortgage to be paid faster.
Mm-hmm.
Some places I see close to university, they have dual residence in the basement. So that becomes a little bit tougher. Some cities, they have some requirements and bylaws in that regard. So you really have to be careful.
Sure.
Now, do you also suggest to work it out through corporation or rent?
Yeah. So I actually have something on that on my blog. With the corporation, your financing is going to be even more complicated and expensive. Where do I have it? So I don't really think it makes as much sense as people think it does sometimes. I think sometimes people think they're going to get a tax benefit, and they don't necessarily. So if you have and a lot of times you have to provide personal guarantees. So it's not like you're here it is. It's not like you're going to keep from being liable for it, right? Because you're going to have to do a personal guarantee anyway. And if you're going to do it in an operating company name, then that's a commercial mortgage. So there's tougher penalties, higher rates.
Yeah.
But if you have a business that you've been operating for some time and you've got a bunch of money in a holding company and you want to use that money that's in the holding company without taking it out of the holding company, right? So you want to do it within the holding company name, that could make sense.
Mhm.
Because that way you're not paying tax. Because when you take it out of the holding company, you have it has to be as income or dividend. So if you want to do it in the holding company name, then the down payment can be kept within the holding company. So that could make sense. But on the financing side, it's a lot more difficult.
So if I have this is my first day, I want to invest in real estate. I have two choices, whether I go on my own personal mortgage or I establish a corporation and the corporation is trying to purchase a house.
Mhm.
Financially, I'm both obligated to both scenario regardless. But you're saying that going through corporation is tougher and would make your mortgage a commercial mortgage? Is that what you're saying?
It could be, yeah. You can, I would say it can still be a residential mortgage, not commercial, if it's done through a holding company. Yes, it can be, but it is more difficult to get approvals. It's not, there's no tax advantage, but I could see if
Okay.
you're doing it with someone else, why you might want to do it through a company, just to have all the shares, all the ownership nice and clear. I can see that.
Okay. A technical question for you, Kim.
Yeah.
Let's say here's two scenario again, same thing. I buy a house for investment for myself. I move in there and rent a basement. It's under my name. It becomes my primary home, right? So when I sell it, is tax free. Okay. Now let's say scenario number two. My first day investing in real estate, I say I go under corporation. I buy the place, same thing, rent the basement. 5 years down the road, I sell it. The fact that I purchased it under corporation, would that exempt me from primary home tax or no?
So it's the company's holding, it's not your personal holding. Even though you have a personal
Obligations.
obligations, but it's not personally in your name. It's the title of the home is in the holding company's name. So now
So,
there'd be a capital gain there and you'd be taxed at the corporate rate. And I believe with those kind of investments, it might be the top rate. I don't know exactly. That would be a good question for an accountant.
okay, I came across this situation. I had a conversation with an investor last week, and that was one of the things that I doubt as an advantage to get a corporation. But as you said, if there are few people, like you're making joint venture, the suggestion here is to make everything under the corporation.
Mhm.
Unless you are buying one property for yourself or your joint venture, let's say is your uncle, is your father, your sister, then together you can purchase the property and becomes your primary property. Make sense? Now, Kim, based on your experience, what kind of property would you buy as a first time investor?
Honestly, I don't really have an opinion on real estate. I don't really focus on that. I defer to you on that. You know a lot more about that than me.
Okay, okay. So,
Yeah.
looking at the situation right now in the market, would you recommend, I'm asking that in terms of financial strategy, would you recommend a condominium or would you recommend a freehold or a house?
So I
Or,
feel like that's more of a real estate investment question.
no, in terms of financing, like the banks are looking at maintenance fee, the banks are looking at different things that we don't know.
Yeah, but I mean, if you can get a condo for a whole lot cheaper, then the maintenance fee would maybe not be such a bad thing, right?
Okay.
So it's
And
going
is
to
it,
be,
and is there anything that the banks are looking at if you go a little bit farther, or is it an advantage or benefit financial wise in regard of where you buy your property, or does it really matter?
no,
All
I
this
think
stuff.
it's more the condition of the property that could be an issue that you want to watch out for.
Okay, so for a newbies, in terms of understanding the conventional banks, I think there are five, and then B lender. How do you categorize them? Who are they? Like, what are they? B lenders, A lenders, private lenders? How does it work?
Okay. I actually have I have an article on that as well from here on alternative lending. I'll just show you where it is. It's this one. So obviously, you know, the big five banks, the CIB, CIBC, Scotia, TD, RBC. So we all know those. There's mortgage finance companies as well that don't necessarily have a physical location, but they're funded by investors, and a lot of the investors are actually those banks. BMO is another one. And they have really great terms, and they're really great to work with a lot of times. But when you're talking alternative lending, you're usually dealing with trust companies, credit unions, some banks like Canadian Western Bank. Then there's mortgage investment corporations, where it's a bunch of capital that's been pooled. And then there's like literally private people, just, you know, somebody who has money that is looking to lend it. So these are, I've personally dealt with private, like individual lenders. I've dealt with trust companies, credit unions, banks, and mortgage investment corps for alternative lending. And then I've just sort of set out some of the criteria. For those lenders, you're going to need 20% down minimum. The more you put down, the more options you have. And then the variation in rates is just astounding. I mean, it depends on what you're doing and what your profile looks like. I've done alternative mortgages in rates just in the high twos. And I've done them at a rate of like 12% interest. But what I would say is don't get so focused on the rate, because if you look at some of the fees that you can get hit with, it's not really a sales pitch, but I've done them for as cheap as a $500 application fee. And I've done them as expensive as almost 6% of the mortgage amount in fees. That was a tough one. So there's huge variation on that.
Mm-hmm. So why someone should go to credit union and not BMO, for instance?
If you're talking about alternative lending or A lending, like A lending, you can get good at both, good mortgages at both. So there's no reason to deal with one over the other, really. Depends on the credit union.
Okay.
You know, the big thing with the brokers, what I always try to explain to people with the big banks is their penalties on their fixed mortgages can be absolutely brutal. So that's something I always try to help people understand. Really, when you're dealing with a mortgage broker who has lots of opportunity with lots of different alternative lenders, you can have quite a few other options if it's necessary.
So put it this way, if I give you a call and send you my document, how are you going to choose where to send this document? What is your criteria?
So what I do is I'll have a brief chat with you just to kind of get an idea of, are we in the ballpark of having an actual application here that could work, right? I try to help you understand how much you can borrow, just back of envelope kind of stuff. And then if you want to move forward, I try to get all of your information. Like if it's in a pre-approval, like let's say you're just meeting with them and you're just starting to look at properties and things. It's different if you come to me, oh my God, I bought this place and I need a mortgage. That's one thing. But if we're doing early days kind of stuff, I will try to get all your documents so that I can give you the best scenario, the most exact scenario possible, because you're going to be looking at places, and if you make an offer on a place, you're going to be expected to actually finance it, right? So I want to make sure you're going to be able to do that.
So the best mortgage is not necessarily the lowest interest rate, correct?
Yeah, definitely not. I mean, So I have actually something on that on rates. Everything that goes into a rate. I mean, there's so much that's going on in the background. So here it is. I have like 31 things here to think about, so rate is easy, right? Because, oh, boom, here's the rate. But there's so much around the product that you need to know. I mean, so not everybody wants to go that deep. And what happens is you do develop a relationship with lenders that you're comfortable with and that you know will do a good job. And that's who you tend to deal with.
Okay, got it. So and you had cases to send this applicant to a B lender or a private lender. Have you had that before?
Yeah, lots of them.
Lots of them. Okay. All right. Is there any private lender that would come up with 90%?
I've heard of that, but I've never used it. I've got the farthest I've gone is to 85. But my company, so I'm with Premier Mortgage Center, and we're part of the Mortgage Center. And literally, there's 250 lenders that I can submit an application like that to if I want to. Like I have the people that I deal with that I'm comfortable with that I know will do a good job. But if I get a deal like that, 90% loan to value private, I'm going to submit it to our B team, which will figure out where we could place it.
All right. So you said you have access to 200.
250.
Wow.
Yeah.
More than I know 5 of them are the conventional banks. The rest should be either B lenders, credit union, trust companies, or
mortgage investment. Like when you get into private, I mean, how many people are there in Canada, right? 35 million.
Wow.
So you can have pretty much unlimited.
Now, do you have experience on rent to own as well? Do you know how it works?
I do not. I do know a bit how it works. I know that it can be tough to prove the down payment on them when it's time to do a mortgage. Have you done them?
I'm exposed to rent to own. I know how it works. Unfortunately, what I see, the investor, because when it comes to rent to own, reality here is the investors are trying to get your home, and then for, let's say, a term of 1 year, 2 years, or 3 years, you pay them in brackets, so-called rent, which is in fact pays for investors' mortgage. And after 3 years, you're committed to take over. All right. Now, what I see this is happen is the investors are putting a tough time on you to, as a buyer, to qualify you. It's not like the old time. Okay, you want to buy a house. How's your finances? Here you go.
It's getting harder and harder to qualify. Yeah.
It is. I'm thinking because of the number of defaults that happen with people. After 3 years, they cannot really commit to the obligation, and they are defaulting. So that's for that reason I see there are more conditions pressed on the purchaser, rent to own person. Kim, what is the interest rate right now?
For an insured purchase, like with CMHC,
yes, insured.
Rates are pretty low. You can get as low as like 1.6 on a 5-year fixed.
Wow, that's giveaway, and that's variable. You say that's fixed. Wow. Yeah. Which bank is that?
Meridian.
Wow.
But you're going to wait forever for an approval. So you don't send that into there if you've got a condition of finance.
That's give away money, 1.6% fixed. And what is on, like if I come up with 20% down, what is the interest rate I can get for?
204.
Okay. This is the lowest I've seen for many years, no?
Yeah, I've never seen it that low.
Are you, based on your knowledge and exposure to the market, are you expecting next year interest rate moves up, or what do you think?
I don't think anyone knows that. No one predicted this, right? Everyone, like obviously when they're so low, how can they go lower? And then they go lower.
True.
So, I mean, the government put in programs to keep the mortgage market liquid, to keep the bond market healthy. And they've stopped those programs, but obviously, we haven't seen rates go up since then. So
Okay.
I don't really make decisions around that because I've been around too long
Mhm.
to do that. And I just think it's baloney. I just don't think anyone knows. I mean, you
Yeah.
can, you can predict a few days out if the Bank of Canada is going to raise rates, probably fairly accurately, but that's about it. So what I do is if you're thinking of fixed versus variable, I have people go through this, which is, just a bunch of things to think about. The spread, if there's a big spread between the fixed and the variable, it probably makes sense to go variable.
Uh, all of my properties from a long time ago, I'm purchasing as investment. That's my personal preference to go with a variable because historically I pay much less than a fix. Is that what you see also? What you suggest?
So I agree with you 100%. And if you look at historically, that's what has done well. But I wouldn't, you would be surprised how many people are nervous and they want the fixed.
Sure.
And I myself tend to be conservative. So I tend to push people in that direction. Like I don't push anyone, but if you said to me, well, what do you think? I'll be like, well, 1.6 looks pretty good to me.
Absolutely.
Yeah.
Of course, I will go with that too.
Yeah, but a lot depends on the person's situation. Like if their life is very much in flux and you think they could end up selling the place,
Yes.
Then variables got a much more predictable penalty.
Absolutely. So just a recap for all of our audience here, in terms of purchasing a real estate investment property, one of the very first things, you cannot jump into the market and say, let's look for a house. It doesn't make sense. The very, very first thing happen is you have to sit down with your mortgage broker or even your real estate agent who is walking from beginning with you. And this is what I do with all my clients. We sit down before we think of what's going to happen there. Just check to see what's happening with that person's situation, where it's coming from. Is it the first investment? Is it the third investment you're doing? And based on that one, what I always do is to check their vision. Maybe they all want to buy one house and that's it. Some other people, they have a bigger vision. They want to start building their wealth. Technically, based on what I do, I can see that you can purchase your first house and then 3 to 5 years down the road, your home build enough equity to pull out the money from it and buy your second one. And if you go really, really slow, within 10 years, you should have 3 homes. All of them start from the very first one. So you don't really need to save more money to buy your second one. If you wait 3 to 5 years, and then here's the catch. You cannot just go to, let's say, Windsor. I'm talking about a normal situation, not talking about the hype we have right now. The price of properties went up even in Windsor. The price of property went up everywhere, regardless. Even in Ottawa, the price is high. And I'm talking about a longer, let's say 10 years growth. I know typically Kitchener-Waterloo, the growth was around 2 to 4%. Same thing for Ottawa. Closer you get to GTA, the growth is higher. Let's say talking about Vaughan, 8% to 10%. So generally speaking, if you are thinking of putting three homes in 10 years, you have to purchase properties that generate you enough return. Let's say 8%. How you can find 8%? These are the properties that are closer to GTA. So there is a pattern that you can follow. Which neighborhood has the most growth? It doesn't mean you should go anywhere close to GTA. For instance, if you go to Jane 401 neighborhood, it won't grow. Okay, it's reality. It is GTA, but it doesn't grow. So you have to go to a certain neighborhood that has history of growth, and then purchase your property there with the lowest as low as possible. Then you have to give it 3 to 5 years, rent it, solid rent. Let's see the growth happening there. After 5 years, you revisit. You pull out the money. You ask Kim, can you help me to refinance this house and pull the money out and buy the second one, and on and on. So within 10 years, you should technically have 3 homes, all starting from the first one. So this is what I always recommend. If you are, I used to buy one home every year. I have no problem with that. But I was really on the course of getting more. I wanted to purchase more homes, and that was a race I was choosing to go with. But if you are not real estate agent or real estate investors, professionally doing it every day, then you're working somewhere else. Then if you want to go a slower pace, hey, 3 homes in 10 years is no brainer. And that helps you to accumulate your wealth. Kim, for those people who do not have your phone number, why don't you share your phone number and your email address with us? And our audience can always contact you or call you after for more in-depth information from you, and maybe you can help them as well.
Sure. So here it is. This is my website. There's my phone number. And where is my email on here? You have to go to about. Contact. There it is.
Great. So you can always call Kim. Is nothing to be worried about. She knows very well what's going on with the real estate investment. She can help you to package your situation very well and present it to 250 lenders. If anyone wants to contact me, you have my phone number, 647-407-4049. I'm more than happy to have a consultation over the phone. And that's my passion. I like to help, and I like to talk to the investors and help them with a different strategy they want. And I know Kim for many, many years, and she knows that I'm very passionate about real estate. And after all, this is why I'm sitting here every week from 7 to 8.
Great job.
Invite different people, different investors, same like-minded people to come and share their experience with my investors here. Anyone has any question here? I have chat. Let me see if I have. Please send the link to. Okay, so I have a link to send the information to. I think that's it for the question. Thank you very much, Kim, for joining us in this webinar, and hope to see you in the next one.
Yes, thanks a lot.
Thank you.
All the best. Thank you. Bye-bye.